If you have a stocks and shares ISA or a general investing account, there's a good chance you're leaving money on the table. A 2025 survey of UK investors found that most people don't understand ETFs, the core building block of building a sustainable portfolio long term and for smarter investing. 95% of UK investors don't understand the one investing tool that can make their lives much more easier and stress-free. Now, this survey of over 2,000 diligent investors highlighted that ETFs were the single biggest knowledge gap, and it was costing people money over the long term. So if you invest long term, have a stocks and shares ISA or a general investing account, the research unpacked in this video will definitely support your longer term goals, especially heading into 2026, which alone could put you ahead of over 95% of investors. It's a part of the reason I created this channel, to firstly document my journey, show you guys what I'm learning and what has pretty much helped me along the way, and show any findings that I've been reading and keeping up to date with, because that's how you find those golden nuggets, specifically in certain opportunities, but also to keep ahead of most people, so you're doing the groundwork now. Widespread lack of ETF awareness and understanding is a major barrier to investing, specifically for UK investors as compared to our US counterparts. They seem to be investing a lot more and have the knowledge and the know-how to get involved in certain markets. However, there's obviously a culture in the UK where it's more focused on saving rather than investing, and saving is literally costing you thousands over longer periods of time. Now, for context, the research reveals that many investors firstly have no clue what ETFs even are, or have a very vague understanding of them, which directly impacts their confidence to get involved into investing in ETFs. This then directly impacts their willingness to learn further and invest in certain products. So if you're fairly new to investing in ETFs, or even if you've been investing in ETFs for the past 1 to 2 years, this video will definitely support you moving forward into next year. ETFs are also perceived as risky, mainly due to the name exchange traded fund, which can associate them with being much higher risk. Don't get me wrong, there is still risk when investing in anything, and that includes ETFs. But if you don't have a firm understanding of them, or you're unsure what an ETF actually is, how can you give a well-rounded opinion or judgment on them before getting involved? This is a huge opportunity that people are missing, especially if you're in the ages between 18 and 34, because you have time on your side. The fact you're watching this video right now shows that you're on the right journey to building sustainable wealth for the long term. So in today's video, we'll be discussing trading versus ETF investing activity, investing experience by age, and how the younger people are leading the way with this, the reason why investors in the UK are slowly leaning towards ETFs as a preferred investing method compared to other assets. ETF investors trade more frequently than the wider investor base. They tend to be more engaged and take a more of a hands-on approach when it comes to their investing. This is shown by how often they trade and how they monitor fees consistently. Now, this doesn't mean that they're buying and selling every single day, but it typically highlights the open positions that they'll be making, whether that be a buy order, for example, every single month for over a certain period of time. And the data shows this. Trading activity of investors over the last 12 months is drastically higher for ETF investors, ranging from 6 to 12 average trades per month, around 43%, which is different to the non-ETF investor when they're looking at not trading at all for the month at around 38%. I thought this was quite interesting, considering there seems to be a big misconception that ETFs are just for traders and not for long-term investors, whereas I like to look at it as ETFs being the main core and the satellite for my portfolio, and then I add other stocks and even other ETFs or even trusts around my main ETF position, such as the S&P 500, for example. There are so many different ETFs out there, ETFs that track emerging markets, developed world, ETFs that focus on semiconductors or AI, for example. So they're a great way to stay diversified and keep some consistency throughout your portfolio. Most ETF investors are based in London and are aged between 18 and 34, and typically have just started investing within the past 5 years, which is similar to myself. I've only started investing in ETFs for about 2 years now, and I'm also based just outside of London. So if this is also you, you're already ahead of the curve, especially when it comes to investing at specific age brackets as well. But don't worry if it's not you. Again, having the knowledge now is something that you can always take action upon going into next year, and looking at different ETFs that match your needs and requirements for investing. 38% of people have heard of an ETF but are still very much unsure regarding what an ETF actually is. Now, this does raise concern considering the most recent budget regarding the cash ISA being cut to £12,000 going into from April 2027 as a shift. It seems to be a shift of getting people from putting money into cash to getting them investing more into stock, shares and ETFs, for example. But considering people from this data here are not even aware of an ETF, I don't think the psychology of those people will necessarily change unless they're essentially getting the support that they need from the ground up. So it's important to keep yourself educated and look at different data and statistics to find value where you can. Now, the research also shows that if you're a higher earner, you're likely to start investing earlier, and that's because you have surplus cash. Now, you don't have to be making hundreds of thousands a year to start investing. You can open an account with Trading 212, for example, and I've put a link down below where you can start with as little as £10 per month, and you invest in fractional shares to get your investing journey going. The most important thing is starting and putting away an amount that you're comfortable with every single month, so you're building something longer term. Having money stacked in cash in the bank is no longer going to cut it just due to inflation, which you're actually losing money when you think about it in real terms if you just got tons of cash in the bank. Now, as mentioned, most people have started investing within the last 5 years, and that's including myself, so they're still relatively new to investing. And some things that essentially could have influenced this are social media, looking at specific trends that are coming up on certain pages, and how everything is obviously digitalized now and a lot more accessible. Even opening an account is a lot more accessible to the retail investor. We can also clearly see that most people in the UK are risk adverse, so I'm not surprised that savings is at the top of the list. However, I thought the cash ISA would be much higher from a percentage perspective, just given how risk adverse people in the UK actually are. But this is changing, especially if your age is between 18 and 34, because we're seeing more people open up stocks and shares accounts, and they're getting involved into, although riskier assets, they will yield a higher return over different periods of time. Now, we can also see that ETF investors are not afraid of taking risk and having more volatility within their portfolios. As we can see, over 55% of ETF investors will invest into individual stocks and shares. They'll also invest into investment trusts and companies, and we're seeing cryptocurrency even have a higher percentage than premium bonds, which is showing that investing into higher risk assets, people have a lot more liking to that, especially if you've already invested into a product like an ETF. And me personally, I can relate with this, as I invest in individual stocks and shares, I invest in ETFs, I've started investing into cryptocurrency as well. I don't invest in bonds just because the return is much lower, and I'm happy to take on that risk. And another misconception is that you can start investing into real estate trusts, and it's a great way to get exposed to real estate through an ETF, for example, if you couldn't afford to purchase an investment property. So it's a good way to start getting exposure to real estate without having to directly invest in a physical property. Although investing in a physical property is likely better. Again, I'm not a financial advisor, but it's still a great way to get some exposure to the property markets. I also thought CFDs and futures, which only came in at 16%, would be much higher, just as we can see that a lot more people are day trading. I used to day trade back in the day, but I've taken a step back from that for now. Again, that could change in the future, but CFDs and futures are a lot more riskier and volatile, and can be seen as a lot more consistent, just because there's a steeper learning curve, I would say, to learn how to trade and make sure that you're profitable over time. For example, monitoring costs is something that should never be overlooked, especially when you're investing, and it's great to see that ETF investors who are already exposed to the market are conscious of costs before getting involved in positions. We can see that 46% of investors choose to invest in ETFs due to the costing that is around them, as well as the diversification aspect too, so getting exposed to different stocks and regions by investing into one basket essentially. Now, in my opinion, the best way to start is to start investing little and often, having consistent habits and really building up that muscle memory to invest over time. And you can set up automations to take out the mundaneness of investing, for example, as investing something is better than investing nothing. In my opinion, it's a practical way to build a sustainable and a successful portfolio for the long term. I also think, although a lot of people seem to be trading ETFs, I think it's a great way to approach ETFs from a long-term perspective, so using them as a core satellite for a portfolio, mainly because nobody can predict the markets, nobody knows what's going to happen to the markets tomorrow. Now, of course, this is just my opinions and my interpretation of the PDF, and I've provided it in the link in the description below. So let me know your thoughts, guys, and leave me a like if you found this video helpful, and I'll see you on the next one.